All right. Good morning. Thursday, August 15th. We're halfway through August already. Ridiculous. How you guys doing this fine morning? We're going to cover a couple things on the new V2 script once Dave pops in here, and we'll let guys get rolled in. We got 5 or 6 coming in so far. We'll give it a couple minutes and we'll get trucking. This will most likely be the last trading room for August. Hey, Greg, good morning. Good to see you. As we know we discussed, I'll be on the road a little bit. I'll test and see if anything works to see if we can potentially do one, but no promises since I have no idea what internet's going to be like where we're cruising. They usually don't have a whole lot of internet in national parks, so we'll find out. And especially when I get to Canada. I don't know what my coverage is going to do. That's one thing I need to check on is our phones in Canada. Add that to my list. We got the running list in the phone of things I need to get done before Saturday. And it keeps getting bigger instead of smaller, so we know how that goes, right? All right. Well, we're definitely seeing a recovery, a little bounce back that we saw. Anybody in any trades this morning? I've got it set up, compare the V1 and the V2 script since there's been a lot of activity about that. Okay, good morning, Asham. Good to see you. Good morning, Dave. Good morning, Mark. Asham just got home, so no trades for you. It's all good.
Good morning, everybody.
Hey, good morning, Dave. There you are. Guys are just getting rolling in. And I was just letting them know I got it set up on a lot of talk and activity around the V1 and V2 scripts, so we want to cover that quick and then go to other topics at hand since we have a lot of interesting things happening in the world right now.
Yeah, a lot of interesting things.
This is mildly, right?
Oh my gosh, this room could go for 2 hours and we wouldn't cover it all.
But we can't because I got a hard stop. Get as much in as we can.
Yes, absolutely. And it's the last one before you go on vacation.
That's what I was just talking about. I said, I'll check and see what my internet's like, but no promises since I have no idea what it's looking like where I'm going.
Yes.
No trades for Greg. That's all right. Sometimes the best trade is no trade. You can't lose that way.
Absolutely. All right. Well, let's get started on the spread first. We had a little bit of a upturn right at the open, which was what was called in the TSA. We had if you have the spreadsheet there, we'll go over real quick and kind of take a look at it. But it was definitely an update for the spread. It looks like we're starting to turn the corner a little bit here, right on the binary trend. We got a 1 in the first column, just getting started. The bell curve was -1 to -5, so that was negative, but the UD percent column was at 12% Tuesday, which typically is like the bottom of a move lower. So even though we didn't get a peak in the bell curve, we got that -12%.
It's like the 15 back then, and it turned.
Yep, that's exactly what I was looking at. So it's possible here that we've got a little bit of a turn. We'll have a couple positive days, and we'll go from there. Now, the cross column bell curve is flat, but it stayed positive. So that's a good indication that, hey, there's still some strength here in the move higher. And then, of course, we had the 2 negatives positive yesterday. Didn't turn out to be very much of a move, but during the day, it was actually a lot larger than that.
Yeah, there was plenty of other things going on to worry about that part of it.
Yep. So, yeah, big day yesterday, and the market's down 800 points, 238 on the NDX. Wow. Do you still have the advanced decline line set up there?
Yep.
If you take a look at yesterday's, it was almost a perfect triple T day. Almost. The only problem there's the advanced up and down volume. Rather, the up and down volume was absolutely almost picture perfect. But the advanced decline never dropped below 2,000.
Not until the middle of the day.
Yep, it dipped down a little bit during the day, but then it rose above it again. So it wasn't a true triple T day. But if you take a look at the advanced up and down volume, boy, that was nearly picture perfect. The only thing that interrupted the picture being perfect were the green bars there. Yeah. So very, very close. We're seeing it more often now. So guys, pay attention to this. We saw it last week. We're seeing it again this week. I haven't seen it this often since 2008. So, like I said, I don't know if this is going to be an indication of what's to come, but you definitely want to watch this every single day from this point forward to see if you can catch one. Even yesterday, not picture perfect, but you obviously wanted to stay on the short side of the trade whenever there was a midday rally. And, even though, we opened up, down 300 points or so, 350, we went down 800 on the day. So those kinds of, I don't know what causes that up and down volume to stair step like that. I really don't know, but it almost seems like it's pre-planned. Like, hey, we're going to have a down day here. All the orders are going to be entered as efficiently as possible. This is my opinion of what the up volume and down volume is indicating, is that there was an overwhelming amount of sell orders in the market that the specialists had to handle, and they wanted to create an orderly market. And so in order to create an orderly market, they hold those sell orders on their books. And as the day progresses, they let out those sell orders little by little by little over the course of the day. And that's what causes the stair steps. If they released all those sell orders at the open, we could have been down 2,000-3,000 points. So that's my opinion of what's happening. It's just my understanding of the way that specialists work and the up and down volume works. So pay attention to those, because if it does start stair stepping like that over, in the first 15, 20 minutes of the day on the 5-minute chart for the up and down volume, that's a pretty good indication that they've got massive sell orders that they need to, get into the market in an orderly basis. And that's their charge. The specialists are there to create an orderly market.
Yeah, think about it being your job. Okay, your job here is to liquidate these 1 million orders all day, so have fun.
Exactly. Mm-hmm.
And one interesting thing, too, I know I sent you a note on this, is first off, I found it very surprising to even see the potential already, because, like you say, this comes around every couple of years. It's like, oh, I just caught one. I missed one last week. It's like, no way, is this possibly happening again already? I was really in shock just to see it potentially starting. And then I mentioned here, so this did dip below 2,000 around the middle of the day.
Yep.
I did, this caught my eye where I was actually done trading. I exceeded my profits in the morning. This happened. I said, whoa, hey, maybe we got an opportunity. I can short more things for the afternoon and, get a little bit more. Well, it just so happens this was on the bottom side of the roller coaster, so I had to ride through a little bit. I did end up making more, but it was a lot more headache than it was worth, let me tell you. So just because this dips, that's not a signal.
Exactly.
Take it from Dan.
Yeah, that dip typically, the perfect day is when it goes down below minus 2,000 in the first 15 minutes. This kind of day with the advanced decline like that up and down indicates to me that there's, you got to be really cautious, but definitely it's going to be more profitable to be on the short side than the long side.
Right. So that's the key, is the first 50, you want to see this get here and stay.
Yeah, and just stay there all day long. Yep.
That's what the triple day is.
Yep. So, boy, yeah, it's odd that we're really getting a couple of these. Well, potentially yesterday was not perfect, but still, to have these happen in such a short period of time could be an indication of much more volatility coming. And so, keep an eye on that, guys. Heads up on that.
Yeah,
All right.
start in your corner and just take a peek at it in the morning, first 15. It's all it takes. Be like, oh, here's a warning, or here's a signal.
Yep, absolutely. All right. So anyway, we got a response from the developer on the V2 scripts, and I know Dan has pulled these up here. And I know a couple of you guys had emailed support on this because the second signal, or not the, it's not a signal, it's an indicator, and so it's a trend indicator. And so what it's doing is it's repainting on the second on the lighter arrow. So the darker arrow in the script is the current 5-minute signal. The lighter arrow is the one from the 15-minute. So for those guys who have not seen, who didn't write into support about this, this is what the developer is saying. The higher time frame, and I'm quoting, the higher time frame arrow isn't a trigger, but a trend confirmation indicator. And the 5-minute bar may close, but the 15-minute chart is still forming during 3 of the 5-minute bars. And so what's happening is, it's me again, is that, you can repaint the 15-minute bar, because until that 15-minute bar closes, you're not going to get a solid signal on the lighter color signal. The darker color signal will close. That's the 5, because you're on the 5-minute chart. But remember that the lighter color, the confirmation signal on the higher time frame, isn't closed yet. So he goes on to say that those two time frames, the M5 and the M15, 5-minute and 15-minute bars, close at different intervals. And that's why the arrow from the M15 on the M5 will not paint permanently until the larger time frame is closed. The M5 indicator is painting correctly for that time frame. He also is actually working on something that maybe will cause a little bit less confusion about that signal on the higher time frame, so that it doesn't paint until that 15-minute time frame is closed. So here's what I do when I used it. When I did the video I think it was last week, when I used the 1-minute and the 5-minute, well, the time difference between those two is only 5 minutes. So they're very, very close together. If you use a 5:15, you've got a 10-minute spread between those two time periods, right? If you use a 15:45-minute time frame, if you have a multi-factor of 3, now you're talking about a 30-minute spread between the close of the 15-minute bar and the 45-minute bar. And so what will happen is if you're using a 30-minute spread between, for the multi-factor, even if you're on let's say you do a 5 and a 30, so you do a 6 multi-factor, then your first paint on the confirmation of the 30-minute bar won't happen until a half hour after the market opens. That's at 10 o'clock. And it can fluctuate in between that. So you got a half an hour between 9:30 when the market opens and 10 o'clock. And so that will flash either negative or positive as the market moves in that first half hour. So my suggestion, we didn't leave it at that. I asked him to go back and look at the script again and take a look at it to see if there's anything we can do. And he did email me last night and say that he's going to work on something to help sync those a little bit better, so maybe it's not painted or it's not flashing while you're while you're waiting for the higher time frame to close. I'm not sure that's a great idea. I think it's a good idea maybe for some people. I like to see what the higher time frame is telling me, even though it's flashing. Maybe it goes from green to red. I like to know what the higher time frame is saying. So I guess we'll keep it as a version. Maybe if we do something with the higher time frame, and select not to paint it until that bar is closed. But personally, I like to see what the higher time frame is saying, and the flashing doesn't bother me. In fact, it's helpful. Eric says this morning I used a script on the 5 and 10, had a perfect entry at 9-10, signal is perfect, trade on ES plus 20 handles, nice. Very nice, Eric. Awesome. That is awesome.
So just for comparison, I have these both here that we're talking about. So this side, this chart is the first one that you saw Dave do the video on last week. This is version 1. So I have 2 time frames, 2 charts upright. This is a 1 minute. I'm showing on the 1 and the 5. Whatever the intervals are, whatever, I can make this 5 and 15. Same principles apply. Over here is the new version 2 where they're both painting. And as we've been talking, you see how this one's flashing and painting in, just like this one. They're the same thing. But right now, the higher time frame, the red, is the higher one, or the green one here is this one.
Right.
So this one's just starting to paint right now. That's why we don't even see it over here yet. Because that just started, actually, I believe. That wasn't there 2 minutes ago.
Yep.
So that's how you discern between the two. So whichever one you're comfortable with, just understand that, yeah, it's not going to paint live on the first minute because it's a 15-minute bar or whatever the higher time frame is. That's why you see this back here, comparison to this one when this one closed.
Exactly.
Does that help people? Hopefully that helps. We'll keep this up and we'll make sure that people can view it as long as they need to. But yeah, it's just a matter of, I agree with you, Dave. I'd like to see the flashing coming because it gives you a little like, see, here we go. This one's starting to go green again. You kind of get an inkling of we may go up or we may go down. So I personally like it.
Yep. I'll take a trade on the shorter time frame with the dark signal, and then just kind of watch the higher time frame to see if it starts flashing either green or the opposite of my position. So I like it. I mean, some people may feel that it's not something that they want to watch all the time, and or it confuses them. But if you don't, now maybe that we've explained it, you'll have a better handle on it and understand its purpose. All righty. Let us go to the news of the day.
Which one?
There's so many, but I'll tell you, this is really, really interesting. The 30-year Treasury notes went below 3%. 30 years. Below 2%. I'm sorry, not below 3%. Below 2%. It hit 1.98% overnight. Did you guys hear this? Did you guys, anybody pick up on this at all? Just put a yes in the chat if you did. Isham said he saw it in the news. Yep. Anybody have an idea? Mark saw it. Richard, no. Sham, 6 months away. It's no, it happened overnight today. 6 months away from negative interest rates, you think? Yeah. So this just blows my mind. It really does. If you look at a chart of the yields on the 30-year in April, it was at 3%. 3%. It dipped last night to 1.98%. That is a huge move for a 30-year note. Unbelievable.
At the same time, you get this happening. The 2 and the 10-year crossing, right? That just happened yesterday.
Yes. There's always been this understanding in the market. I mean, it's common. It's pretty common knowledge among professional traders that the bond market, not only is it much bigger than the stock market, but it tends to drive world markets. And when we see this inversion, the Fed knew this, the Fed knew that, hey, we got the 30-year bond yields dropping since April. That's why they lowered interest rates, because they cannot. It's good if they inverted, if the short-term rates inverted to the 30, it's bad enough the 2 and the 10 are inverted.
Right.
But if the think about, I just want you to think about this for a second. This is really, really interesting. And it's critical going forward as traders and investors, and just kind of like our own personal financial safety, is that why do interest rates on the 30-year go up and down? Anybody have an idea? Just throwing that question out there. Why do the 30-year rates go up and down? What's it based on? What are the rates based on? Greg? Oh, Greg says he worked all night, haven't seen any news yet. Yeah. Yeah, that's the tough part about working all night, that's for sure. Anybody know why 30-year rates go up and down? No? It is kind of a mystery to most people. I think most people think of the 30-year rate as the rate that they pay when they get a mortgage.
Yep.
You know, it's like, well, they're going to peg it to the 30-year rate. Mortgage rates are tied to longer term rates, but it all has to do with supply and demand, just simple supply and demand. So when people are interested in investing in the market and they see that there's economic growth in the future, and they see that the economy is improving, they see that the outlook for the long term is really, really, positive. Its demand for those longer term notes will drive those rates higher, right? So if everything looks good, hey, we could see a 5-6% 30-year, which is not out of the question. We've had it many, many times. Do they have a chart there on that page? I'm looking. I want to show you guys this chart.
Can you see this one? This is all the way back from 1989.
Okay, good. Yeah, that's a good one to show. So, I mean, look at that. 89 was almost 10%.
Yep, it hit 10.
So, from 2009, though, it's really just kind of, I mean, it's been going down since, 89. That's incredible. But since 2009, it started to accelerate even lower and lower and lower. And so what happens is that, the demand for the 30-year is starting to drop. So prices have gone higher, and there's less, in the longer term, there's less demand for, number one, there's less demand for mortgages. So this is going to impact the mortgage market. Now, it should stimulate a lot of people to buy real estate because interest rates are so low, right? And it also should stimulate refinancing. I don't know if you saw this news, but I believe it was Denmark that is paying people to take out mortgages. Their interest rate on a mortgage is negative.
Well, yeah, that's what I was thinking about. The whole talk of going negative. It's like, yeah, think about that. You can get paid to borrow money. Yeah,
they will pay you to borrow money. So they're trying to stimulate demand. Now, the 30-year is not controlled by the Fed. The Fed only can control short-term rates. So it just means that there's very little demand out there for the longer-term treasuries. Lower interest rates are lowering, so they have to hopefully it will stimulate demand, but it's all market-driven. The rates are market-driven. And but let's think about this scenario for a second. Interest rates drop below 2%. Now we can get what? if pretty soon, if it kind of stays at that level, we are going to see 30-year mortgages at 2.25%, 2.5%.
I know I have mine at like 3 3/8, and I'm like, geez, should I save another percent?
Yeah, I know. I bought my property down in DC in 2014 at 3.7. I thought I was getting a great rate. Of course, interest rates did. Yeah, I know. It's like, wow. It's like, wow. It's almost zero.
Right.
Because I was, I'm a child of the 70s. Well, and then, in 1970s, interest rates were at 15 and 16% on that savings rate. Mortgages were 20.
Right.
Oof. And I'm thinking, geez, 3.7. That's incredible. And that was one of the reasons why I kind of, you can go out and buy a house. But think about this for a second. Interest rates are lower. You can go out and buy a house. And not only can you buy a house with a lower interest rate, let's say it's 2.5% or 3%, you can now also afford more house. When they do the calculation, the ratio of your income to your expenditures, and they kind of fix it at, I think it's like 30% or something, 33%. So if you have, if your mortgage is 33% of your monthly income, then you qualify. If it's higher than that, you don't qualify. Well, that's the way it used to be. I don't know if it still is, but now you have the same income, but the interest rate is lower, so you don't have to pay as much in interest on a monthly basis. You can now qualify for more house. So if you were going to buy a, say $300,000 house, now because of the lower interest rate, you don't have as much. The monthly mortgage is going to be less because the interest rate is lower, but you have the same income. Now you can afford a $350,000 house.
And they're not building smaller houses.
Yeah, that's the bigger part too. Yeah, I mean, I thought that they would certainly start building smaller houses with the baby boomers kind of like cutting back and stuff like that, but I guess that's not happening.
Yeah, at least in my neck of the woods, they're not. Everything's crazy. It's like there is no more such thing as a starter house unless it's like 100 years old.
Oh, really? Wow. That's interesting. I thought the tiny house kind of.
Well, I guess there's the other spectrum of that, yeah. But not your regular, not mobile, not movable house where they're building residential stuff. Everything new is, $300,000 to $500,000 to $700,000. It's like,
yeah.
Where's the $200,000 house that can be new? It's like, no, you can't build a house for that. It's like, you can, you guys just don't want to.
Yeah. So, but think what happens when, even though interest rates are very, very low, nobody wants to buy a house. Think about that scenario. Now what happens? Demand is down again. I mean, think about it. If the 30-year Treasury note is below 2%, what has to happen to the shorter term rate? It's got to be way below 2%.
You're right. It's got to get below it. Yeah.
Yeah. 30-year at 1.98. What are you going to do with the 3-month? It can't be 2%. It can't be above the 30. I mean, people would just put all their money into the 3-month and sell the 30s and arbitrage it. I mean, it'd just be insane. So the Federal Reserve has to lower interest rates.
Well, weren't they just saying too recently that they're going to do it 3 more times now this year?
Yeah, they say that. Well, it's going to be September, December, and then the first quarter of 2020. That's what they're talking about.
Yeah, I was trying to think. I'm like, how can you do 3 more times in this year? You don't have enough months left.
Yeah, no. So it'd be 2 this year, then 1 in the first quarter. So 3 cuts, 2 of them happening at the end of this year, in September and in December, and then 1 in the first quarter of 2020. But I mean, right now, what's the federal funds rate at? I think it's 2%, isn't it?
Yeah, 2.25.
Yeah, because they lowered it from 250 to 2.25. Let me just do a quick.
I want to get rid of all the ads. I understand, but
Yeah. Okay, according to Fred, which is the St. Louis Federal Reserve, it is 2.4. 2.4%. That's not good. 30 years at 1.98.
Mhm.
So, which means that the difference is about half a basis point, right?
Yep.
So they're going to have to lower in September by 0.5%.
Yeah, it's not going to be the quarter.
No, it's not going to be a quarter. That's right. Yeah, they got to go down 0.5% or more. Oh, if they went to 3/4, holy cow! Can you imagine what the market would do if they did a 3/4 rate cut?
Right.
Holy cow! A half, I think, is going to be enough to startle. I mean, it's just going to be insane. That's the way I see it. I mean, bring up that chart again of the 30-year, because I mean that really tells the story. What the heck? Under normal economic conditions, that 30-year probably at this point, after all the quantitative easing and everything else that's going on that they've done for the last 10 years, plus we don't have rates high. We don't have it. It's been dropping. Why? Expansion of the money supply. They have printed so much money that there's no way that it can be valuable. And so, the rest of the world is really some places are negative. Everybody's trying to devalue their currency. The U.S. is the standout. I think it has one of the highest rates in the world. And so, in order for us to compete, that's why Trump is arguing that, hey, we need the dollar to decline. Keeping it high is causing problems, not only for manufacturers and everybody else in the United States. It's making, actually the high dollar is pretty good if you travel. I mean, geez, you can buy a lot in other countries that have, currencies are much lower, but it's hurting U.S. businesses tremendously.
That's the part that I've never understood about the whole tariff war and implementing tariffs, is it hurts locally versus internationally. Yeah, you had a tariff, then the local companies are the ones that have to raise prices, and we pay more.
Yeah, that's true. So that means inflation is rising because we have to pay more for goods imported from overseas. But what Trump is trying to do is trying to create some sort of equalization, so that number one is, they've devalued their currency, right? So if China's devaluing their currency, their goods are going to be a lot cheaper in the United States. Well, to offset that, to create a level playing field, that he has to saying, okay, well, the difference between the US dollar and the yuan is about 20%. Let's tack on a 20% tariff on imported goods. And that kind of equalizes the exchange rate. See, Chinese don't like it because it costs more for U.S. citizens to buy their goods, and they'll cut back on buying if it's too high compared to American goods.
And we probably won't have time to pivot subjects, but what's the overall ultimate equalizer of all the currencies, right? And that whole conversation.
Yeah, that's a good one. I mean, there's lots of speculation about that. The IMF has come out with discussions on how to actually. This is not a new problem. China and other countries have been trying to devalue their currencies for a very long time. One of the issues with the United States it being the reserve currency for the world is that we run a lot of deficits. So because it's the reserve currency, it's used all over the world. There's lots of demand for it, and that's why it stays relatively high compared to other currencies. And so how do you fix that? Well, the IMF has come out and made some statements to the fact that we need to have a level playing field and nobody wins in a trade war. And that's absolutely true. But how do you actually get to the point where you can levelize and prevent or stop the country? And think about it too, though. China is in their own self-interest is devaluing their currency. It's not something that they're doing to spite us or to be mean, like, oh, let's kill the Americans by lowering our currency. No, it's self-preservation on their part because of the tariffs now. And so it just exacerbates the situation, and then nobody wins. Nobody really wins in that situation. So one of the scenarios, I'll call it a scenario. This is pure speculation on my part, guys. Just pure speculation.
Anurag's got it.
Yeah, that's where I was going. Yes, the Chinese central bank. No, they have launched it, Anurag. As far as I know, the Chinese central bank has actually launched their cryptocurrency, central bank crypto. It's a digital currency. And the funny thing is that they've been working on it since 2014. They've been working on it for 5 years. And they just announced that it's ready to go. They're ready to use it. And they will use it. So, planning to do Valar with crypto, he says. Maybe. That's a possibility, yeah. But they're so tight right now. It's kind of hard to do that. But it's something to look into in the future, definitely. But the idea here is that all the central banks, this is pure speculation, but I'll just kind of throw this out there for you guys to decide on your own. All the central banks have their own digital currency, let's say. They're all in development. Many countries are already in development of cryptocurrencies. In order for them to transact with another country, they have to bridge those two currencies. So they have to bridge the Central Bank of China's currency, digital currency, with the Federal Reserve in the U.S.'s digital currency. They haven't made any announcement, but I think it's coming. And so they have to bridge them between each other. And a lot of people are saying that XRP, which is the digital currency, open source digital currency that was created back in 2013, I believe it was created in 2013 by Ryan Fugger. And he had developed this currency, and then it was basic. He had health issues, and he gifted it to a company called OpenCoin, which eventually became Ripple and Ripple Labs. And they inherited most of the XRP at that point. And it's fast. It settles in seconds. It is interoperable. So Ripple, the company, developed something called the ILP, the Interledger Protocol, which is which can be a layer of the internet similar to SMTP. It's an open source protocol for transferring value across the entire internet. And XRP works on the ILP. And so now you can bridge all of these central banks' digital currencies. And so you're not going from fiat to fiat. Now, in the end country, this Chinese country, they might want to convert their digital currency back into yuans, like we might convert it back into the US dollar. So it's not going to destroy fiat. But what it'll do is it'll create a level playing field so that central banks can exchange funds with each other using XRP as a bridge currency across these different central bank digital currencies, digital coins. And there's no reason to inflate or deflate the local currency, the fiat currency of each country. And so that is the level playing field. So it's totally even. It's not, if we devalue our currency, that currency is going to go up. Each country currency would be based upon supply and demand within that country. So if they have good economic outlook, that currency will do well. And it's in the best interest of the citizens to have a vibrant and a healthy fiat currency. I mean, if you don't think so, ask Venezuela. What happened to the Venezuela currency? What was it called? The Bolivar, I think.
Close to that. I forget. That sounds right, though.
Have you ever seen that video of what's happening to the currency in Venezuela?
No, I have not.
If you have another window open, do a search for Venezuela's currency on the street.
Yeah, Bolivar, Bolivar.
Yeah, Bolivar. Do a search for Venezuela Bolivar on the street. You'll get this video that is incredibly fascinating. It's just unbelievable.
Street entrepreneurs.
You find it?
I got one from February. I went and searched for videos. My returns. I'll just pull it over here. Which one are you thinking, or which one?
I'm going to try to pull it up. It's a YouTube video. Let me see if I can find it. Oh, here's a good one. This is not Venezuela. This is not Venezuela, but check this one out.
Maybe is it the $100 bills?
Yeah, that's it. I think that's it. Maybe that's it. I'm not sure. Yeah, I'm not sure that's it. No.
1 in 3 people have a
Yeah.
but not all.
I don't think so.
Blah, 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 blah. Go away. Thank you.
No, that's not it. Here, check out the one. Check out this one that I put in the chat there.
I don't know if I can click on a link, Dave.
Oh no.
I'm just kidding.
Okay. V says the Argentinian market had second biggest crash. Yeah, it's huge. See, that's what happens when you get into these kind of situations where either people don't have faith. Yeah, this is it here. This is Colombia. And Venezuelans are making handbags out of worthless banknotes. Basically, there's nothing they can do with their currency. Their currency is so worthless that they're trying to figure out ways to use it because it's just, I mean, it's just paper now. It's just paper. And so somebody, they're clever. They're making handbags out of this currency. That's probably a couple $100 million worth of at one-time currency notes there that are basically just toilet paper. That's
amazing.
So, you have a situation in which, like Venezuela, especially Argentina that V just mentioned, absolutely. All of these currency wars are going to affect the world markets. And I think a lot of countries, if you don't have faith in your country, obviously, and like in the United States, we've been printing money for such a long, long time. I mean,
standard, right?
Yeah, it's just insane. So how do you protect yourself against this kind of devaluation and these currency wars and negative interest rates and all that kind of stuff? Trade it. And buy crypto.
Exactly. Have a just in case fund.
Yeah, just in case fund. You never know. In most cases, once a cryptocurrency is created, you can't inflate it. XLM is the only one that I know that actually is creating more. I think EOS is doing that as well. So they add more XLM, or according to these algorithms, they're adding more on an annual basis. So I'd stay away from those. I want the ones that deflate. So XRP deflates. Bitcoin, there's only going to be a maximum of 21 million. I would stick with the top 2 to 3 coins, maybe the top 10. Anything beyond that is pure speculation. But if you were looking for a hedge against negative interest rates and some of the economic issues that we're going to be having in the future here, then probably sticking with some cryptocurrencies as a hedge. And of course, gold and silver, hey, you can't go wrong, I don't think.
Right, exactly.
Yep, absolutely, Inert. Gold. And you got a silver chart up there? I think silver is going to be like maybe even more of a hedge than gold. SLV, just
the SLV DVC, I can modify it quick.
Yep, just do an SLV. But look at that. I mean, that's basically SLV. SLV is extremely strong against the basket of commodities in the DVC. Just straight up there, guys. I made the comment last time. Once a trend like this generally starts, it does not stop. It keeps going. It'll keep going for a while. Very, very powerful kickoff there with lots of gaps. Those gaps in the early part. There was a big gap. There was some gaps earlier on, like July 14th, 15th as well.
It had to come down and fill the gap, then shoot right back up. Look at that.
Yes, it did. Yeah, it did.
Market does not like gaps.
Nope. But those are not termination gaps. Those are blast off gaps. Eric says, I recently read a speculative report that Amazon is in early stages of developing their own crypto. That's possible. Yep. I wouldn't be surprised.
That's the key is everyone's doing it. Facebook's trying to do Libra. Every country wants to do their own. There is going to be no one that rules all, so why not invest in something that can bridge them together? Exactly.
Yeah, the only one that I know of that can do that is, at this point, is XRP, and then they can bridge from any asset to any asset, basically.
Again, do your research.
Yep, do your own research, guys. But there's even a company called GBI. It's Gold Bullion International that is using the XRP ledger to create tokenized gold. So you can go to them, you can buy gold, which they store in a warehouse for you, and they give you a token, which is proof of purchase. And so now it's on the blockchain, it's public knowledge. It's a legal contract that you own in gold.
Wow.
Yeah, it's huge. And you use XRP when they want to convert their GBA tokens back into fiat. They convert it back to XRP, and then you can convert that to any fiat that you want. If you're in China, you can convert it to the yuan. You can convert it to the Mexican peso. You convert it to US dollars, whatever you want. I believe that XRP can be converted to over 200. I think it's over 200 currencies now, fiat currencies in the world. So you can convert it to just about anything. Anyway, we are close to the end of the day, and I know Dan is itching to get on his vacation, which is another way. But when are you actually leaving?
Saturday.
Gotcha.
So yeah, I got 2 days left. I was mentioning that right before you jumped on, as my list of things to do keeps getting longer, and it's supposed to be getting shorter of things to finish on Saturday.
Yeah, that happens. That happens. When you go away, it's like, what did I forget?
This is a different one too. It's not like we can just, we forgot it this time, we'll do it next time. It's like, no, we're gonna be gone for 2 weeks.
Right.
We need to pack everything that we need.
Absolutely.
Yeah, it'll be fun.
Absolutely.
Yeah, if for some reason I find connectivity, I'll give you guys a shout, and maybe there'll be a random trading room when I'm out on the road? I have no idea, but I'll check on it to see if there's anything possible.
That'd be pretty cool. Make sure you have some nice scenery in the background and show us a pic.
Exactly.
Two announcement, guys, before we wrap up for today. Number one is that starting this weekend, Market Timer is going to be delivered. The Strong Market team has been working on a dashboard. This is breaking news for you guys. If you guys are subscribed to Market Timer, they're creating a dashboard that's going to have all of the major signals from the Market Timer spreadsheet in a dashboard, a visual dashboard with charts, all kinds of different interesting and visuals that are going to be in a dashboard that's going to be on the Market Timer website that you guys can access as subscribers. There's going to be an update of that over the weekend. So over the next couple of days, pay attention to the newsletter. It's going to have more information about that. The second thing is that when Dan comes back from vacation, we are going to create a Trading 101 class. We've discussed it a couple of times. Looks like we're going to do that, right, Dan?
Absolutely.
Yep. We're going to have a Trading 101 class for you guys who want to go right to the very, very beginnings of how to trade. I think we talk about a lot of advanced ideas in the trading room. And so we want to take a step back and help those guys who are just getting started in trading and do this class for them. So Trading 101, really, I think, based on Dan and I's experience, is going to be pretty awesome. It's going to be, even if you guys have been trading for a while, I think you're going to pick up some nuggets in that. So watch for that when Dan gets back.
Yep, we're going to make it, just to give you the little teasers of, think of college level courses and starting out in basics of a 101 and then moving up advanced. So eventually we'll have a whole school of 101, 201, 301 level things. So whether it's people that have been trading for a while or people that are brand new, and I also want to make a course, brand new person that's looking to, have, maybe they got $5,000, they don't have 50 or 100, which the majority of the people don't. How do they still invest in that? So that's going to be part of it, is how do you start from scratch and do something with it and make it worthy.
Absolutely. It's going to be fun. All right, guys. Voltaire says, that'll be great. I wanted my wife to jump into trading, but I can't seem to explain it the way you guys do. Great. She can take this course. She'll be all set.
We'll get her registered for school. School's starting in a couple months, right? Fall's coming.
Yeah. We'll even give you guys nice, shiny certificates.
There you go. Appreciate it, Greg.
All right, guys. Yeah, thank you very much, Greg. Voltaire, Glenn, nice to see you guys. Mark, Isham.
Yeah, thanks, Mark.
Eric, and Jörg. V. Who else we got in here I didn't say hello to yet? Richard.
Anurag, of course.
All right, guys. You have an absolutely fantastic couple of weeks, and we will see you as soon as Dan gets back. Dan, have a fantastic vacation. I am envious. Please send pics.
Absolutely. I appreciate it, guys. Awesome. We'll see you in September, if not in the middle.
Absolutely. Have a good one.
Take care. Bye-bye.